Scott Schweiger with Burnt CPA, bringing you episode 4 of Tuesday Tax Tips. Last week I mentioned that we've lost our personal exemptions but gained some child and dependent credits to help offset that loss. But what happens if you don't have kids? Today's tax tip is another way the lost exemptions are being offset is an increased standard deduction. It's been in the news a lot since the new law was passed. It's now up to $24,000 for a married couple and $12,000 for a single person, which is roughly double from where it was at. One of the unintended consequences of all these changes to exemptions and standard deductions is that the wage withholding table for your paycheck has gotten a little bit more complex. Mostly because the full effects of the changes, though are kind of anticipated, are just theoretical at this point. We haven't had a whole tax year plan out. The IRS did change the withholding tables, so they started to withhold less money out of each paycheck, so you saw a little bit of a bump in your paycheck, most likely, in 2018. But you really needed to do a tax projection in 2018 to figure out your new withholding, which was still kind of odd since all of the actual laws weren't in place for most of 2018. So most people didn't do that and expected that many people actually owe taxes this year instead of getting a refund. It all depends on your own situation. Every case is different, so it's going to be a little bit all over the map this year. So remember, how this will affect you depends on your facts, circumstances, like if you're married, if you have kids, what tax bracket you fall into. So thanks for watching. Hope to see you back next week.